Hello and welcome to the midday news on Souqnews Television. I am Olumide Shokoya. The Nigerian Customs Service Apapa Area Command announced a revenue collection of 161 billion naira within 3 weeks of using its unified custom management system, popularly known as Bedogu. The Custom Area Controller, Babatunde Olomu, revealed this during a stakeholder engagement session, stating that the digital platform has enhanced revenue performance compared to older systems. He noted that stakeholders' patience and cooperation during the transition period had been instrumental in achieving the results. He explained that between August 1st and 2022-2025, the Apapa Command recorded the revenue collection, stressing that the new technology is expected to further ease trade and expand collections. In the months ahead, he reaffirmed the commitment of the Custom Information Technology team to resolve system glitches, adding that the trade facilitation remains central to the command's operation. The zonal coordinator for Zone A, Charles Obi, stressed concerns of importers and freight forwarders, assuring them that the Controller General of Customs was in talks with the Nigerian Shippers Council to resolve challenges and secure the marriage waivers with terminal operators. He emphasized that the Bedogu's system represents a homegrown innovation designed to strengthen customs efficiency and boost national revenue. All producing states have slashed their domestic debt burden by 610.84 billion naira in less than 2 years, supported by the record inflows from the 13% oil derivation fund. Latest data from the Debt Management Office showed between June 2023 and March 2025, the combined debt of 9 oil states fell from 1.66 trillion naira to 1.05 trillion naira, easing fiscal pressure on state governments. Delta, Akwa Ibom, Bayelsa, Imo, Edo, Anambra, Abia, and Ondo all cut debt levels significantly, though Rivers states diverged with a 60% increase. The debt decline was driven by a sharp rise in oil derivation allocations, which delivered 1.67 trillion naira to the 9 states between July 2023 and June 2025, with Delta, Bayelsa, Akwa Ibom, and Rivers talking about 90%. Despite the relief, the states channeled nearly 44% of their internally generated revenue into loan repayment, raising concerns about how much fiscal space remains for new infrastructure and development. Analysts warn that while debt repayment signals healthier balance sheet, the underlying weakness of internally generated revenue points to continued dependence on federally shared oil income. Critics in states like Edo argue that despite huge inflows, residents still face poor infrastructure, unemployment, and delayed salaries, questioning whether the oil windfall is being deployed for real development in the Niger Delta. Now, Nigeria's crude oil pipeline and export terminals are now receiving close to 100% of expected volumes, a sharp rebound from lows of 20% to 30%, according to the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Bashir Ojulari. Speaking at the Africa Chief of Defense Staff Conference in Abuja, Ojulari credited the milestone to stronger security measures and coordinated surveillance across the Niger Delta. Ojulari explained that crude oil theft and vandalism, once a major threat to production, have been curtailed significantly through collaborations with security agencies. He stressed that the crackdown on sabotage has not only stabilized pipeline flows, but also reinforced the country's long-term energy strategy, including the $60 billion investment drive to boost production to 3 million barrels per day by 2030. Despite the progress, Ojulari warned that crude theft remains linked to international syndicates exploiting regional security gaps. He urged continental defense forces to strengthen intelligence sharing and joint operations, adding that energy security is inseparable from national and regional stability. Nigeria's Chief Defense Staff General Christopher Musa backed the call, urging African militaries to invest in artificial intelligence and add stronger unity to defeat insurgency and safeguard energy infrastructure. British shop prices surged in August, recording the sharpest increase since March 2024, raising new concerns about inflationary pressure. The British Retail Consortium reported 0.9% rise compared to last year, with food costs soaring by 4.2%, the highest jump since February 2024. The spike was largely driven by essential goods such as butter, eggs, and chocolate, reflecting higher demand, supply constraints, and rising labor costs. The Bank of England has already flagged food-driven inflation as a key driver of rising consumer expectations, which could translate into higher wage demand and persistent inflationary pressures. Britain's broad consumer price inflation stood at 3.8% in July and is projected to hit 4% by September before moderating. Retail leaders have also cautioned that additional tax burdens could strain the sector and undermine efforts to improving living standards. At the same time, the job market is showing early signs of weakness. Recruitment platform Azuna reported that vacancies fell by 1.2% in July, while advertised salaries dipped by 0.3%, reversing gains, while demand remained stable in construction. Healthcare roles saw a sharp decline in shifting labor trends that may complicate inflation outlook for policymakers. India is bracing for economic shocks as United States moves to impose steep new tariffs up to 50% on Indian goods beginning Wednesday. The decision announced by Washington as punishment for New Delhi's continued purchases of Russian oil, which will affect more than half of India's $87 billion export to Africa. Exporters warned that the measure could slash shipment by up to 30% from September, with industries such as textile, food processing, leather, marine products, gem, and jewelry facing the deepest strain. The announcement immediately rattled markets as the Indian rupee slipped to 87.75 against the dollar, while benchmark equity indexes fell by nearly 1%. Officials in New Delhi admitted there is still chance of securing an immediate reprieve. Commerce Ministry insiders say exporters will be given financial support and urged to diversify to nearly 50 alternative markets, including China, Latin America, and the Middle East. Yet business groups argue that moving trade away from the United States will not be easy given its scale and long-standing dominance in India's biggest customer. Analysts caution that the higher tariffs could weigh heavily on India's economy, trimming up to 0.8 percentage points from growth this year and next, while driving down corporate profits. Many thanks for watching. Please do well to follow us on all our social media platforms at Souqnews TV. I am Olumide Shokoya. Coming up shortly is Just Africa. Do stay with us.